Welcome back to Success with Steven. My name is Steven Smith. On this channel, we discuss all things financial literacy. Last year, I created a video on the best credit builder loans, and today I want to give a full in-depth review of Kovo Credit Builder. Credit mix contributes to 10% of your overall FICO credit score, and this refers to the variety of accounts that you have, like credit cards, installment loans, auto loans, and even your mortgage. A good credit mix will demonstrate your ability to manage different types of credit responsibly. However, unsecured loans are one of the hardest credit products to qualify for, especially if you're rebuilding your credit or your credit profile is thin, and that's where Kovo comes in. So today we'll discuss the features, the pros, the cons, and who this will actually benefit. And if at any time during the video you decide that you want to sign up for Kovo, there will be a link down in the description below. So without further ado, let's get right into the video. Let's start by discussing who Kovo actually is. Kovo Inc. is a registered public benefit corporation that states their specific purpose is to create an environment where economic mobility is more prevalent and people have more power to influence their financial well-being, and this is done in 3 ways. They design products with a commitment to help you achieve your goals. They don't offer products that can lead to chronic debt or financial ruin, and they set their prices in a manner that's transparent without hidden fees or surprise charges. The term public benefit refers to having a positive effect on people, communities, or public interest other than the company itself. This is also one of the few credit building products that reports to 4 major credit bureaus: TransUnion, Equifax, Experian, and Innovis. Kovo also gives you access to your FICO score. They don't specify which one it is, but from what I gather, it's an average of all 3 scores. That's rare for most credit monitoring services, let alone a credit builder, which I think is a great perk. Most traditional credit builders that you see are in the form of a secured loan, meaning you deposit a certain amount of money, let's say $500, and a company, bank, or credit union will hold that money. They create a loan payment plan for you to pay off for a set term. Once the term is completed, you get the money back minus any fees or interest that you may have agreed to based on your terms. And Kovo's a little bit different. So next, we'll discuss exactly how this works. Kovo isn't your traditional credit building service. It's not a secured credit card. It's not a loan that you're getting from the bank. It's actually what's known as a retail installment loan. So instead of giving you a lump sum of money or a line of credit to spend freely, Kovo lets you finance a series of educational courses, life skills, entrepreneurship, productivity, and even Google Sheets tutorials. You agree to pay $10 per month for 24 months for access to these digital courses. Think of Kovo like buy now, pay later products like Affirm, Afterpay, Klarna. Signing up for Kovo gives you access to this library of interactive educational resources, which Kovo claims is worth $400. So you're essentially buying this library of content on a credit, which you pay back monthly in installments. So to sum it all up, you're essentially getting a $240 retail installment loan that's $10 per month for 24 months. And like I said earlier, this content can range from helpful to, let's say, aspirational. And I doubt most people are logging in to finish like a self-confidence module or master Excel pivot tables, things like that. So to be honest, most people are signing up for credit building, not the coursework. So you may not really benefit from those things. Eligible customers with 4 on-time payments will gain access to a single-purpose credit line with a $500 limit to use at Kovo. The revolving credit account provides customers an additional way to build credit on top of their installment credit account. Now, when you pay down your revolving credit account in a timely manner, that's going to help you continue to build payment history. It keeps your utilization low and builds credit for a longer period of time. And this also reports to all 3 major credit bureaus, Experian, TransUnion, and Equifax. This also includes a high deductible $1 million ID fraud insurance policy with 24/7 ID resolution services. Kovo also provides an opportunity for you to earn some money back through their rewards programs. So whenever you apply for credit, among other things that Kovo offers on their website, it rewards you with gift cards that vary by state, and you can view before signing up for that service. The amount that you can earn comes out to 1% of the loan's value. So the maximum amount that you can earn depends on the type of loan. If it's a personal loan, then you can get $400 maximum, student loan $250 maximum. auto loan $150 maximum, and credit cards are a flat $75. Let's break down how this actually helps your credit score. As you may or may not know, there are 5 key factors that influence your credit. Payment history, which is 35%, amount owed or utilization, which is 30%, the length of credit history, which is 15%, new credit, which is 10%, and credit mix, which is also 10%. Kovo hits 3 of these 5 categories: payment history, new credit, and credit mix. So by paying your Kovo bill on time every month, you're feeding positive data to all the credit bureaus for 2 years. Once again, on-time payments is the biggest factor in regard to your FICO score. The more on-time payments that you have and that get reported, the better your score will be. There's also no credit check to get started. So if you have no credit or you're in the process of rebuilding, not being subjected to a hard inquiry is beneficial. And since installment loans are different from revolving credit like credit cards, it also helps diversify your credit mix, something that lenders like to see. So if your current profile is thin, meaning you don't have many accounts, adding a Kovo account can help it. It'll beef it up a little bit. And if you have bad credit, it can add some positive account history onto your report to offset some negative items over time. Kovo also has a return policy. So if you change your mind within the first 30 days, you can cancel and get your money back. That's not something that you see every day. You can also cancel Kovo after 30 days by paying it off, but I don't really recommend that you do that. The purpose of this is to help build your credit, and it helps build your credit by reporting on-time payments for a longer period of time. So paying it off faster kind of defeats the purpose. It won't really help you. Now, to initiate a refund, all you need to do is send an email to support@kovocredit.com. If you do that in the first 30 days, you will be able to get your refund. Now, this part is very important. Let's say that you forget to pay or your bank account is light one month. Kovo will give you a 30-day grace period to catch up. There are no late fees, just a reminder or two. But after 30 days, it's a different story. They're required to report late payments to the credit bureaus. A single 30-day late payment can tank your score by 60 to 100 points. I talk about this all the time. Credit is a zero-sum game. You need to make sure that you are essentially perfect when it comes to payment history. So here's my tip. Set up auto pay. Just let it draft. It's $10 a month. Forget about it. That way, your credit keeps improving without you having to think about it. Let's talk about who Kovo is actually for and who will get the most benefit out of this. I believe that this is ideal for people with no credit, thin credit profiles, if you're like a student, a young adult, people recovering from past credit mistakes, anyone with a thin credit profile who wants to improve their credit mix, and people who are denied by other credit products due to having a very low score. If that is you, then this could benefit you. Who this is not ideal for is people who already have several installments and revolving accounts that are reporting to their credit, those who can't realistically afford to pay the $10 a month. This also isn't for people who expect a quick fix when it comes to credit building. This takes a lot of time. And if you already have good credit and you just want to add something on there, there's probably way better options for someone like you. I would not say that this is it, but if you're starting from zero or you're trying to get back on track, Kovo is an easy, low risk way to do that. So here are my final thoughts, and we'll also go over the pros and cons. So pros, no credit check. It reports to all 3 major credit bureaus plus Innovis. It's only $10 a month. There are no hidden fees. You build both installment and technically you can build revolving credit as well. There's auto pay, a 30-day return policy, cashback rewards on future offers, and you have identity theft protection that you can also get. The cons, this is a small size loan. It's a $240 installment with a $500 revolving line. The revolving credit can't be used outside of Kovo. It's not a quick fix. This does take time to realistically see results, and educational resources may not really appeal to everyone that is using them. Now, here are my final thoughts on this. I've used many credit builders in the past to help me get my credit score to where it is right now. And what I can say is, if you're someone with a thin credit profile, like you're just starting to establish credit right now, I think this can help you a lot. I think it'll be a great option to pair with another revolving line of credit or a secure credit card and maybe keeping this for 2 years. And then after that, you should be able to qualify for some regular unsecured installment loans and some other products, especially if you don't have any late payments, you don't abuse credit, and you just use it properly. Now, if you're someone who is trying to repair your credit, while I do think that this is good, I think you need to taper your expectations. I'm just going to use myself as an example. I messed up my credit a few years back, and it took me about 24 months to repair it. I took about 1 year to let the accounts age because I had repaired my own credit before. So I knew it was a little bit easier when accounts had time to kind of get inaccuracies and they had time to be sold to collection agencies, and those kind of things make it a little bit easier. So in the meantime, I did things like disputed personal information from secondary bureaus and stuff like that to kind of make the process easier. When I started, after about 1 year, 13 months or so, I was able to get everything removed. Of course, I had to actively stay on top of that. Even when my credit score was at a 700, I had a thin credit profile with a few credit builders, but that was it. It wasn't the worst thing in the world. My credit score was still high. I could qualify for some things, but a lot of big things, my credit profile was too thin. And your credit score is a report card of how well you pay debt. So you can have a high credit score with a couple of credit builders. However, you won't qualify for large lines of credit or high credit limits. Reason being, if anyone lending you money has never seen you handle large amounts of debt, why would they lend you large amounts of debt? So in turn, if you had a $240 installment credit builder loan, you're not going to get a $40,000 personal loan. It doesn't make sense, right? So that's why I'm saying taper your expectations, but everything has a purpose. If you're at that stage where you're just rebuilding, this is great for you. If you're thinking about a $40,000 loan when you're in the rebuilding phase, that doesn't make sense. Again, taper your expectations. This will do what it needs to do for the time that you have it. And then after you're done with it, you can move on to the next thing, which would be some unsecured lines of credit and some unsecured loans, maybe smaller, and you can work your way up to bigger amounts. So that would be my recommendation. And if you have a great credit score and you're looking for something to thicken up your credit profile, I would say that this is not it. If you don't have any derogatory marks, your credit score is high, you should look at getting something else that you actually need, like maybe a personal loan that you want to pay off with low interest and you have an idea of how you're going to use it and you can feasibly pay it back because you make the income to do so. Then go get that. But if you're not, if you're rebuilding, if you're new to credit, then this will definitely help you. All right. Thank you guys so much for watching this video. Hopefully this will clarify any questions about Kovo and their installment credit builder loan. If you have any other questions, please drop them in the comments below. Again, if you're interested in this particular credit builder, link is in the description. Highly recommend that you try it. When you sign up, let me know that in the comments as well. And let me know of any other credit builder that you would like me to review next. Once again, thank you so much for watching, and you guys have a wonderful day.